Thanks, Jay, and welcome everybody. It's a pleasure to be here. Avino's in its 51st year, 32 years of production. Our primary assets in Mexico, the Avino mine, and we've got the development stage asset, the Bralorne mine here in BC. We have a pipeline of 7 projects up and down North America, as high as the Yukon in the United Kingdom Hill Camp, the Bralorne, and down in Mexico in Durango. Avino is the flagship producer for us. We produced 2.8 million ounces of silver equivalent in 2018, and we've got a large untapped area of exploration potential on that property. Same in Bralorne. Bralorne's fully permitted. We got the M207 earlier in the year, and we're permitted to build a mine, but we've decided to focus on exploration. I'll talk a little bit more about that in a few minutes. What we're doing in Mexico is optimizing our plant. We completed a major expansion there. We increased the capacity of the mill by 70%, and we're up at 2,500 tons per day. We're evaluating how to improve recovery rates through metallurgy and some other optimizations like automating the mill. And so those are the projects that we're working on. Our long-term growth will come from Bralorne, the oxide tailings project in Mexico. This is our waste pile that has a lot of good amount of silver and gold in there, and we're doing it. We did a PEA, and we're looking at reprocessing that material. Avino, Mexico, is located in the heart of Mexico in the state of Durango. It's on the Sierra Madre Silver Belt. It's a 1-hour drive from the city of Durango. All our staff down there, 100% is Mexican labor. 80% come from the local areas, and 20% we house on site for contractors. So we have access to every type of skill set there. Here's what we're producing. This year we're on pace to do about 2.8 million ounces of silver equivalent. But next year we're going to feed the mill with 100% Avino ore, and we expect it to go over 3 million ounces of silver equivalent next year. And hopefully metal prices continue to hold in there, so our margins grow and our profitability grows. Again, long-term growth will come from the oxide tailings. That's scalable. That's probably 3 or 4 years out, but that will increase our production by 50%. So we can go up to about 4.5 to 5 million ounces a year with that addition. Here you can see the overhead shot shows you the vein clusters on the property. It's a volcanic caldera. It's a very prolific area. Dozens of mines exist there that go back hundreds of years. To the west, Coeur Mining has La Preciosa, 150 million ounces of silver equivalent joining us. So it's a very, very prolific area. And we're mining just at the bottom there, and you can see over to the right, the long section is the Avino mine. So it's a 1.6 kilometer of strike. You can see that it's open at depth, on strike. And the yellow area is where we're currently mining. So there's a lot of room for expansion here. And we've got 2 drills that we own. So we've got the capability of drilling for 70% of the contract rates, and we have our own assay lab there. So we're able to turn around the results pretty quickly. We've got 350 employees. As I mentioned, 80% local, 20% we house on site. And it's a porphyry-style mineralization stockwork system. So there's potential at depth far below this, because porphyries tend to stack on top of each other. So there's many years of mine life ahead of us. And here's an interesting area. So this is what we call the Hanging Wall Breccia zone. This is a zone we knew about, but we never really sampled it because it wasn't part of the main mining area. This is a splay vein that comes off the Avino stockwork system. And so our geos went in there and resampled 52 drill cores, and we came out with a significant resource potential. And this is going to be part of our new resource estimate that we're working on. It should come out either by the end of the year or in Q1. And this is going to, it's higher in gold. So this is what we feel is going to help the mill next year achieve over 3 million ounces. Here's the resource estimate. So the earlier in the year when this came out, it estimated 10 to 12 years of mine life. So with higher metal prices, the cutoff grade will go lower in the new resource estimate. So this could extend the mine life just based on what we know today. And so you see 10.6 million ounces of measured and indicated, or 47.5 million ounces of silver equivalent. And then inferred, we got another 6 million tons, equaling 23 million ounces. Here's the PEA results on the oxide tailings. So this was done in 2017. But interesting, the silver price was $18.50 and gold was $12.50, so we're above that. So you look at this is based on a standalone basis, which it's not because we have all the infrastructure there, but on a standalone basis, it's going to cost $28.5 million to build this out. We think we can do it for less. And the pre-tax IRR is 48.4% and post is 32% based on those metal prices. This will add 1.5 million ounces of silver equivalent annually for 7 years. So this is, and the cost will be $7 an ounce. Here's an overhead shot of Bralorne. So the infrastructure's there, famous area. I'm sure many of you know about it. Produced over 4 million ounces of gold from the Great Depression right up to the late 60s. We've upgraded all the infrastructure. We're compliant with all the Ministry of Environment, and we embarked on a major drill campaign, which I'll talk about in a moment. You can see it's located about a 4.5-hour drive here from Vancouver, year-round access. All the skill sets are available nearby. So last year we raised $6 million in flow-through at $2 a share and embarked on a major drilling campaign. We hired 8 geologists and we remapped the area. We brought in a structural geologist to do a new interpretation. We digitized all the old workings. There was 13,000 scans of old maps, 20,000 entries of old channel samples. All this information is now in a beautiful 3D model. So now we can project in the gap zones in between the mines where the prospective targets are. And what we've learned is that there's a shear veins that run parallel to the faults, but the tension veins in between is what hosted all the gold. And the past drillers in the last 30 years were going after the shear veins. They didn't go after the tension veins. So we're targeting them right now, and we put out results that are favorable. So our guys are really excited about this. Moving on. So here's our consolidated financials. So the last few years, we're doing about 34 million US in revenue. This year, if everything holds the way it is now, will be similar to that. Our costs are about $13 for silver equivalent. For last year, during the metal prices decline, and we focused on cutting our G&A. We successfully cut our costs in Q1 by 38% and then 24% in Q2. So we're a lean, well-oiled machine. Moving on. So looking ahead further to underground development at the Elena Tolosa, and the hanging wall breccias, this is going to feed 100% of the mill next year, so we're excited about that. We've recently completed a new mine plan, so we're very confident about this. We're working on a new storage facility for our tailings. We're going to use the old open pit. It has about 3 or 4 million tons of capacity, so it's a form of reclamation. And so the locals are happy about that. We're going to continue to explore and add options for mineable tonnages using the hanging wall breccia zone. And keep going here. Here's research coverage, and well, we should have moved the newsletter writers to the top. Mr. Jay Taylor has been following us for many, many years. Moving on, we're under a minute left. So our market cap is 66 million Canadian, 50 million US. We've got a very liquid market. We've got 76 million shares outstanding. Daily trading average is 750,000 shares on the NYSE, and we trade about 100,000 shares on the TSX. I'm the second largest shareholder compared to an institutional shareholder, so I have plenty of skin in the game. And just to wrap things up, investment case, so we're diversified in Mexico and Canada, key mineral regions that have been proven for a long period of time. We've got a good pipeline of long-term growth projects. We've been successful in cost-cutting measures. We're looking at maintaining profitability and increasing our balance sheet going into next year. So perfect timing. Thank you all very much.